Welcome to the Deep Dive. Today we're taking a close look at the Lotusbee Market Digest from July 11th, 2025. You sent this one over, and it really captures a fascinating day.
It certainly does. A day where things didn't quite move, in lockstep.
Exactly. So our mission today is to unpack those key movements, highlight maybe some surprising trends, and really help you understand what was driving the financial pulse that specific day. Okay, let's get into it.
Sounds good.
So what immediately jumps out, I think, is how Friday, July 11th was described right there in the digest as a clear mirror day. What exactly does that mean for someone trying to make sense of it all?
Yeah, that's a great place to start. A mirror day is quite interesting. It basically describes a situation where your traditional markets like stocks, they pulled back.
Right.
But other assets, specifically things like crypto and commodities, they actually kept performing strongly.
Huh. So real divergence.
Clear divergence, yeah. In investor sentiment and, frankly, where the money was flowing that day.
Okay, so let's start with that pullback then. The major indexes, the S&P 500, NASDAQ Composite, Dow Jones, Russell 2000, all finished in the red.
Mm-hmm.
We're talking declines from, minus 0.22% for the NASDAQ, which is pretty mild.
Relatively mild, yeah.
To a pretty significant minus 1.32% for the Russell 2000. And the VIX, the volatility index, it popped back up, moderately elevated, they called it, around 16.2.
Right. A bit more nervousness creeping in.
So what caused that shift? We were just seeing record highs, right? What suddenly changed?
Well, this really raises that key question about market sentiment, how fast it can turn. The digest points pretty clearly to one main driver: the resurfacing of tariff threats on Canada and allies.
Trade tensions again.
Exactly. That sent a clear risk-off signal right into equities. When these trade tensions escalate, investors often just pull back from riskier assets. Standard playbook, really.
And that's what we saw. Okay. But even with the market down overall, there were some, clear winners and losers among S&P 500 stocks. Let's maybe dig into those a bit. Who gained and who slipped?
Yeah, that's where it gets interesting on a day like this, these individual stories.
So on the gaining side, Levi Strauss, LEVI, wow, an impressive jump, plus 11.3%.
Huge day for them.
PriceSmart, PSMT up 5.3%. And Alphabet, GOGL, actually led the NASDAQ gainers, up 2.2%.
Yeah.
What's the story behind these standouts on a down day?
Well, when the broader market's falling, these gainers often tell you where investors still see some resilience or maybe specific positive news, right?
Makes sense.
So for Levi Strauss, it was pretty straightforward. They beat earnings expectations and they raised their outlook. Investors love that.
Classic beat and raise.
Exactly. PriceSmart, that seemed to benefit from strong sales numbers and a bullish forecast, specifically tied to its Latin American operations. And Alphabet's rise, well, that really underlines the sort of continued strength people see in search, but also what the digest specifically calls out as AI momentum.
The AI factor. Still strong.
Still very strong. It indicates that, tech leadership can be selective. Not all tech moves together.
Right. Okay, now for the other side of that coin, the top S&P 500 losers. PayPal, PYPL, slipped 5.8%. Gilead Sciences, GILD, down 4.0%. And Bristol-Myers Squibb, BMY, lagged with a 3.4% drop. What does this tell us? Where were the concerns bubbling up?
So this reveals some specific sector pressures and also company-level issues. PayPal's decline, for instance, was attributed pretty directly to some analyst downgrades, concerns about profits.
Okay, so company-specific news cutting through.
Definitely. And then the declines in Gilead and Bristol-Myers, they seem to point more towards a broader biotech sell-off, maybe a sector-wide healthcare pullback, suggests some rotation or maybe just a reevaluation happening within those industries.
Interesting. So beyond just the top movers, the digest also highlights the most active stocks. NVIDIA, NVDA holding firm near its, high valuation. Alphabet, GOGL, heavy volume, which aligns with its gain. And AMD showing high activity amidst what's described as tech rotation.
Mm-hmm.
What's significant about looking at these most active names?
High activity, high volume, it often signals really strong investor interest, whether that's buying or selling, right? It tells you where the action is.
Got it.
The fact that NVIDIA held firm, despite that high valuation, suggests, continued confidence from at least some investors. Alphabet's heavy volume just reinforces its leadership role that day.
Right.
And that phrase, tech rotation around AMD, is key. It suggests investors weren't just selling tech across the board. They might have been shifting within the tech sector, maybe looking for new opportunities, rebalancing portfolios, that kind of thing.
Okay, so shifting within tech itself. Now, here's where it gets really interesting, I think, and where that mirror day idea truly shines. Because while equities were pulling back,
Right.
crypto and commodities were actually on the rise. Bitcoin, BTC, hit a new record high near $118,000.
Incredible number.
And it was up about 3.8%, specifically on those tariff headlines, according to the digest.
Yeah.
And related stocks like MicroStrategy, MRA, Riot Platforms, they rallied too.
Yeah, the whole crypto ecosystem seemed to benefit.
And it wasn't just crypto. Metals and commodities saw gains too. Gold advanced roughly 0.4% to $3,337 an ounce, described as a safe haven play.
The traditional move.
Yep. Brent crude oil rose to $68.77, supported by trade uncertainty. And copper. Copper was reportedly up around 50%. That seems huge. Due to tariffs talk boosting industrial metal prices, that copper move is definitely eye-catching, 50%.
So what does this broad strength in these kind of alternative assets tell us?
Well, if we connect this back to the bigger picture, it really underscores that shift to risk-off assets we talked about earlier. But maybe the definition of risk-off is broadening.
How? Well, gold acting as a safe haven, that's textbook, right? Uncertainty rises, investors buy gold. Oil prices reacting to trade uncertainty, that also makes sense, given global supply and demand effects.
Okay, standard stuff.
But Bitcoin's surge on the tariff news, that's particularly noteworthy. It suggests it's increasingly being viewed, at least by some, as like an alternative hedge. A hedge against traditional market volatility, geopolitical stuff. Almost like a digital gold, in a way.
Interesting. So less speculation, more hedging.
Potentially. It's definitely a narrative that's gaining traction. And copper's huge jump on just the talk of tariffs implies the market is bracing for inflation or supply issues for critical industrial materials.
Yeah.
It shows how sensitive commodities can be to these geopolitical whispers.
Wow. Okay, so the Lotusbee View section seems to really sum it all up then. It calls it a mirror day, where, markets tumbled from highs because of trade fears. But crypto and commodities, specifically gold, oil, Bitcoin acted as hedges. They continued to shine. While tech, health, consumer sectors face these markdowns, it highlights that selective impact.
Exactly. It nails the core dynamic of that day. Not everything moved down. Some things moved up quite strongly for specific reasons.
So given all that, what does this digest suggest we should be watching next? What are the key signals?
Yeah, this raises the important question of, where do we go from here? How do these trends evolve? The digest points to 3 key areas to keep an eye on.
Okay.
First, trade policy updates. No surprise there, especially anything concerning Canada, the EU, and specifically those copper tariffs. That's clearly a market mover.
It's still front and center.
Second, investors will be scrutinizing the Fed minutes, looking for any hint, any signal of a potential pause in monetary tightening. That could really shift sentiment again.
Liquidity and rates, always key.
Always. And third, next week's earnings season launch. It kicks off with banks, big tech follows. That's going to give us vital insights into actual corporate health or forward guidance, which will be absolutely crucial for shaping market direction in the weeks ahead.
Real numbers, real outlooks. Okay, so we've really taken a deep dive into this July 11th digest, uncovered how trade fears pulled down the main indexes, but certain tech held up or even gained,
Right.
while these alternative assets like Bitcoin, gold, and oil surged, acting as hedges.
Yeah.
Understanding these dynamics, it really helps you grasp the sort of intricate connections in the global economy, doesn't it?
It really does. And that mirror day phenomenon is, I think, a powerful reminder that not all assets move together, especially when volatility picks up.
Yeah.
So as you continue to navigate all this information out there, it's worth considering how these broad signals, like tariff talk, can ripple through markets that seem, totally unrelated, and how anticipating key events, central bank news, earnings reports, can maybe give you an edge in understanding what might be coming next. It really challenges us to look beyond just the headline numbers.
Well said. Thank you for joining us on this deep dive today. Keep asking those big questions out there, and we'll keep trying to unpack the answers for you. Until next time.